Hello, 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 and welcome to our San Diego County real estate market stats update through June of 2020. Not going to waste a lot of time. Let's just get into it. There's a lot of things happening. As always, I am going over the monthly market indicators report. This is put out every single month by the Greater San Diego Association of Realtors. It is about 15 pages. It's a PDF, and I am happy to email it to anybody that might have an interest in it. So real quick, we'll go through this. And it says, while much of the country was working on a phased reopening of the economy, real estate activity continued to strengthen nationally. June showing activity tracked by showing time. If you've seen any of my videos, you know that showing time, they track all of the showings. They use the lockbox on the showings, and they're able to, they have access to almost all of the showing data throughout the United States. Was notably up from COVID-19 depressed levels in recent months, but was also up from June of 2019, reflecting pent-up demand by prospective homebuyers. I want you to keep remembering that, pent-up demand. Closed sales was down. We're going to go over that, so I won't go into this. But it says, while buyer activity continues to be robust, seller activity continues to be a bit softer. With fewer homes being listed for sale more than a year ago, many housing experts believe that sellers remain reluctant to list their homes due to COVID concerns, which was we're beginning to see a resurgence in June. Until sellers regain confidence, housing inventory will continue to be constrained during what is expected to be a very active summer selling season. So we are just going to go into this. And this here is only on detached homes. There's another one here for attached, but this is for detached. And let's take a look at this. So this column here compares just the month of June 2019 with just the month of June 2020. While this over here, January 1 to the end of June 2019, January 1 to end of June 2020. So a lot of this data we use is over here. But what I do like is that it does have these bars that goes all the way back to June of 2018, so we can see 3 years down the road. I wish it went longer, but it doesn't. So we can see that, every December it kind of goes down and then it starts to come up. But we can also see, as far as new listings from June to June, we're down 20.4%. Year to date, we are down 23.4%. And we can see that here. Here's June here. And you can see, that it is down for 2018 and 19. Pending sales, however, are way up. We had 21.9% compared to June of last year to June of this year. And then minus, so even though for the month of June it was up, year to date, we are still well below where we were last year at this time. Closed sales, if you'll remember last month, I told you that this month we'd see closed sales come up because pending was up last month, and it takes about 30 days to go. Once a home goes into escrow, it's about a 30-day close, and then we start to see this. So closing is almost always going to trail pending by about 30 days. So we're down month to month 7%, and down even farther 14% year to date. Median sales price, however, is still increasing, and this is where we start to see the effects of supply and demand. There is not much supply. You can see we are way down from where we were last year. But because the mortgage rates are so low, we do have that pent-up buyer demand that I mentioned earlier. So we have a lot of buyers out there, and that we're starting to see. And because of that, when there's low supply and high demand, then it drives the prices up, and that is what we're seeing here. The average sales price is up at 6.3% year to date. Average the volume of closed sales, so just a dollar figure, we're down, and that's because we're down in inventory and down in closing. Percentage of original price increase. So you can always see when the supply is low and we got buyers bidding it up, that the percentage goes up higher. So what this means is that for every $100 of list price, the sellers are getting $98.40. So that's pretty close to list price, and that is the average. So you can see that probably many are going over list price, and then some are just staying below it. Days on market has gone down. For the month of June, it went from 28 to 26 for the month, down 7.1%. And year to date, it was starting to climb a little bit last year, and it was really starting to climb in 2018. But now we're back down to less than 1 month of days on market. Housing affordability has it went up a little bit, which means that it is more affordable. The 56 is still not where we need to be, but the reason for that isn't because the home prices are coming down, it's because the mortgage rates came down, so making more expensive homes more affordable, if that makes sense. Inventory of homes for sale, this is where we're really hurting. We're minus 50.4. So last June, we had 5,110 detached homes on the market, and now we're sitting at 2,531 for the entire county. San Diego County, if you'll remember, has 3.3 million residents. So this is not a lot. So this is why we're getting bidding wars and why the prices are continuing to rise. Month supply of inventory has dropped to 1.4. So what that means is that if not another single family home comes on the market, we will totally sell out of inventory in 1.4 months. And that's a significant drop also. Let's take a quick look at the attached market. So this is not including single family homes, and it is just condos, townhomes, twin homes, duplexes, that kind of thing. So we can see new listings here. They are month to month, they are down 10.2, and year to date down 13.7. Pending sales went way up. So what is coming on the market is pretty much selling. We're way over where we were June of last year, but year to date, we are still not where we were last year. So COVID has really affected us in more of a bigger picture than the narrow picture. Closed sales is down for the month, but not much, 6.2, which you can see that only reflects about 60 units. And year to date, we're down 11% there. Medium sales price, as in single family homes, is going up because of the inventory, and the average sales price has gone up also. Volume of closed sales is down for the month at 5%, and it is down 7.9%. We just don't have the numbers up there. You know, the prices are going up, but we don't have the numbers to reflect that in closed sales. So we're down almost 8% there. Percentage of original price received, for the month, we are actually up, and for the year, we are actually up. So last year, attached homes, condos, townhomes, were selling better than single family homes. And again, that has to do with first-time home buyers. It's easier for first-time home buyers to get into a condo or a townhouse than it is for them to get into a single family home. Days on market has dropped 15.6% down to 27. Housing affordability for attached units has gone up again because of the lower mortgage rates to about 85, which is plus 0.4 or 4.9. So condos and townhomes are more affordable than homes. Inventory of homes, last June we had 2,312 attached homes, and this year we are sitting at 1,583, which is a negative 31.5%. And month supply of inventory is dropped down to 1.7. So again, if we have no other condos and townhomes come on the market, we will totally be sold out of inventory in 1.7 months. So let's take a closer look here. These graphs here are for the month of June, and this is for year to date. This is for single family homes, detached, and this is for attached. So we can see as far as new listings for the month of June, we went way down. We were down last year from 2018, but if you'll remember, 2018, we thought we were reaching our limit, and inventory was starting to pile up a little bit, and then we discovered it wasn't. So 2019 for June, we had 2993, and that dropped to 2381. And you can see the same thing here with attached. And this kind of gives us a year to date. So 2018, we're In 19, we're pretty close, and then we've had a significant drop in 2020. And we see the same thing on attached, but not quite as big of a drop. And this chart down here, this takes us all the way back to 2012. So what we see here is that, this is pretty, we see a pattern is really what we're seeing here. And every December it goes down, and it went down here, but typically you see that sharp increase in January. We saw a little bit of an increase, and then it was starting to just, level out a little bit, and then we see where it went down due to COVID-19. So we can see the effect that COVID-19 is having on the market here. And let's see, pending sales way up for the month of June. And I wish I could get this to just stay. No. Pending sales is way up for the month of June. So even though we don't have a lot of inventory, we have a lot of buyers, and that is boosting the number of sales, but we don't have the inventory. And you can see that down here in this chart. You can see that, boom, it just went up, which is very, this is, when did we have another month like this? We didn't have another month like that since May of 2017. So, many buyers are out there thinking that the mortgage rates, we better take advantage of this. And we are seeing them just jump on it. So pending sales are definitely up in both detached and attached. Closed sales, they are down, as we know, but we've seen them recently come up as we just went over. Medium sales price, we can see it's just been going up, 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 all this since 2012, up, 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 up. We had a little bit of a dip. I'm going to guess that was in 2018 here, and then a little bit in January, and that went there. But you can see that the trend is up, and it's actually made a big jump here in the last month, as I just recently explained here. So, and also with attached, it's gone up. This shows year to date $677 for a single family home and $445 for a detached home. Average sales price is, it's a little bit more ups and downs. The medium home price is, they take this point. So this is 50% of the homes sold went up higher than the median price, and then 50% went lower. So that number typically is a little bit lower than the average, where they take the total average and then divide it by the number of sold. So you see a lot more volatility in the average sales price, which is exactly why they use the median sales price anytime they're talking about it on the news or anything like that. This is the dollar volume of closed sales. And you can see it's very close to last year for the month in both the attached and detached, but year to date it is down more for homes, and it's pretty close to where it should be compared to the last couple of years in the attached homes. And here again, we see that pattern of what's happening and how this pattern is different. How is that going to affect things going forward? We really can't tell right now. Typically in real estate, we look at it in 3-month trends, and we can kind of ballpark where it's going, but we have not dealt with anything like COVID-19 in ever. Well, not me anyway. 2019 or 18, I guess, was the last time. So percentage of original price, list price received. And you can see, while it is a little higher, it has actually been that for a few years. And, we have not, if you look down here, we have not had the inventory. We just have never recovered actually from the Great Recession as far as inventory. Typically, people are just, from the Great Recession, what the general public learned was just to hold on to their home, to not be foolish. And therefore, we have a lot more people that have equity in their homes, which is a great thing, but they don't want to give up those homes, and I can't blame them. Days on market has decreased, but you'll see for single family homes, it's exactly the same as what it was in 2018. And it went up in 2019 for attached, and then came back down a little bit. And we see pretty much the same trend there on the year to date. And here from 2012, again, we just have not had the inventory that would cause homes to sit on the market for a long time. And we've had some fluctuation here, but generally since 2016, 15, days on market have decreased quite a bit. And then here is our Achilles heel, is the affordability index. So the higher this number is, the harder it is for people to afford to live here. And you know, this number was, so it's single family homes are always going to be priced higher than most attached homes. So we see it down here below, and we can see that, you know, even back in 2013, it was about, I want to say 75-ish was what it was for a single family home. And it was over 100 for an attached home. And then since then, we've just gradually seen it come down. And then all of a sudden it started to come up. So, you know, in order for people to be able to afford to live in San Diego, that affordability index has to come down. So how that will play out later, we don't know. It's played out well for investors, I'll tell you that right now. So inventory of homes for sale, you can see from 18, 19 to 21 or to 20, it has dropped significantly for the month of June in both the detached and attached. And you can see here by month, you know, that we had a little bit, lost it, had a little bit, lost it, and then it just keeps going down here. So it's kind of hard to sell when you don't have the inventory. Month supply of inventory, as I said, it was a little higher, and then it's come down for both. And you can see this chart here. The highest was in, you know, towards the spring or towards the summer and autumn of 2018. And we really thought that we were starting to turn a corner and get more inventory, which would, you know, put a little bit of pressure on prices in 2018. But then if you'll recall, the Fed came out and they made two big drops in the mortgage rate, and that, you know, spurred some movement, and then it kind of went down a little bit, and now we're back there. The sad thing about it is, and this is a total market view, and this combines both the attached and detached homes. And so right now we are in unprecedented periods. You know, the mortgage rates are low. The Fed has pretty well indicated that that is not going to change until 2022. Now, the Fed loans money to the big banks, and the big banks are what sets the mortgage rates for us. We just saw this past week that the mortgage rates dropped down to below 3%, first time ever. And that is the banks that are setting that rate. And they are signaling to us by lowering the rates there that they're looking for more transactions. And in order to get more transactions out of San Diego, we need to get more inventory. So the moral of this story is that if you are thinking of selling, this would be a great time to sell. And if you have a second home that you're looking to unload, this would be a great time to sell it. If you are a buyer, you don't have to be in such a hurry. If you find that home that you love, then jump on it. But if you don't, and you're not in concerned about what, you know, where you're living now, whether you're going to be kicked out, whether the landlord's going to sell or anything like that, then I would just kind of sit back and wait a little bit. You are not going to hurt yourself by waiting to see what happens as the months come on. So that is the end of my report and the end of this video. If you have any questions, any concerns, I am more than happy to just have a conversation with you and bounce some ideas off you. So thank you so much. Please stay safe out there, and thanks for watching, and I will see you soon.